following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good Friday afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. Final hour of the trading day, the trading week, and we got markets in the red. You have the S&Ps right now off 111 points, folks. We're trading off 1.75%. You just made lows at about 2 p.m. Eastern time of 62.39, and boy, you got some volatility, right? From 2 o'clock up until where we were, up until almost like 15 minutes ago, you trade from 62.39 up to 62.80, almost a 40-point acceleration higher. We've backed off a bit since then. You see the volume, though, on these charts, folks. We got quality volume to the downside right now in the indices, right? The red bars are the red volume bars, and you can see every time we're trading lower, you have volume spikes. You trade higher, you get a little bit of a reprieve. You trade lower, you get more volume. S&Ps. Yeah, off 110 points. NASDAQ 100, we're off more than 2% right now, off 2.1%, off 489 points. 22,876. Man, we got quite a number going on. Dow right now off 1.4, and you have the Russell off a solid 2% as well, off 45 points. Bitcoin participating in the rally lower, with Bitcoin off by $3,400 right now. Crude trades lower from 69.50 down to 67.29 right now. And yeah, we got to jump to yield. So the jobs number today, the revisions, of course. We're going to talk about that first and foremost, but it's not stopping, folks. Okay, when I was doing the program this morning, 9 o'clock, we were pushing 112 maybe. Okay, you got a little bit of a pop at 10 o'clock even. It's just not stopped right now. You got the 10-year continuing to climb. Okay, we are now well below 4.25%. We'll get it up exactly what we're dealing with right now. You jump over to the fixed income. 4.22. 4.22, just like that. You take a look at the 10-year, man. Yeah. And look at that. 4.19 was where we kicked off July. We had a pretty remarkable July. And then just like that, we take it all back on August 1st, man. Same thing with the dollar. Okay? The dollar, that's where you were, and not quite the same, I guess. You were at 4.19 on July 1st. And on that type of a low yield, you had the dollar pushing 96. Now, even as yields had pulled back, let me get this relationship correctly, okay? You had lower price and higher yield. From that point, you had some dollar strength, but you can see that even in the pullback in yields, we have a little bit of dollar strength right now compared to where we were. As in, you could make the case that as yields are about to break 4.19, that the dollar should actually be lower, right? If the dollar's at 96.37 when we're at 4.19, but we're not back there yet, but nonetheless, man, yields ripping lower in dramatic fashion, and you go up and down the yield curve right now, folks. Oof. How about the 2-year and the 1-year? My goodness, the 2-year? Yeah. 25 basis points, just like that, man. Boom. Just like that. The 1-year, down 22 basis points. Mammoth moves. That's what your 2-year looks like, folks. Haven't seen many bars like that on a daily basis. Oof. For the 2-year to move that far, even on a weekly basis, it's a mammoth move. And it looks like we're coming up near the highs. Pressure's going to be on Chairman Powell like we've never seen before. And boy, we were going to have some real pressure when you come into some of the economic data points that are coming down the line. Okay. And yeah, let's talk about the data. First of all, so revisions, right? How about 258,000 is the revision for May and June? Yeah, look at these revisions, just continuing. Now, this revision, okay, we talked about this when we got the nonprofit. Local government education substantially boosted June employment, only to largely be revised away a month later, okay? In email comments, the Bureau of Labor Statistics said those sectors made up about 40% of the revision and was largely the result of routine incorporation of additional corrected sample that came in after the initial release. Declining response rates is what this article points to, okay? The Bureau of Labor Statistics surveys firms in the payroll survey over the course of 3 months, gaining a more complete picture as more businesses respond. But a smaller share of firms are responding to the first poll. This is important as we go forward to understand how these numbers come out when they can change so dramatically, okay? Initial collection rates have reportedly slid below 60% in the recent months, down from roughly 70% or more that was the norm before the pandemic. And then you have to get into what data is going to be missing. That's where I'm adding this, okay? But what data is going to be missing? Who's going to be late? That's an important one this time, and boy, we found out, okay? The ones that were going to be late are the ones that were missing the jobs, man. The jobs report's made up of 2 surveys, one of business, and that produces the payrolls, and then you get the household survey. Okay, and the household survey was even worse, which is responsible for the unemployment rate. The household survey has also seen a decline in response rates. They've been declining for years as the public has become inundated with tedious surveys and trust in government. I mean, anytime it's just a voluntary survey. Yeah, and talking about the cuts, this is a government agency, okay? 15% of its sample in the Consumer Price Index was suspended from collection on average. That's a remarkable one, right? And this is where I would go into it, okay? It's a voluntary survey, right? If companies are laying people off or anybody's laying people off, they're going to be the people under the most stress that'll be the ones that delay their replies. It's possible that amid the turmoil that has employers scrambling to deal with the effects of rapid change to trade, to immigration, to everything else going on, the data quality is being further impaired by low response rates. So yeah, you had Waller citing the labor market worries, okay, and expected data revisions. Yeah, and we saw the huge revision that came out in February, right? That caught a lot of headlines. Everything becomes political, of course, okay? The BLS puts out an estimate of what the revision will be a few months in advance, and last year that projection was the largest since 2009. Yeah, 818,000 was a yearly, but we just got 258 in a day. I know I'm harping on it to a degree. You got to understand that data. But boy, that is a tough one. And no matter how you line it up, folks, okay, we got a 3-month average. Yeah, it's a great question, Fletch. I mean, why is it that unreliable? Why are we putting it out? I mean, we need some more data, man. Right? Data's everything. Okay? And it's probably unfortunate that that's how that comes out. And it's definitely unfortunate how it comes out today. You better believe it is. Okay? There's no denying that one. All right. All right, let's talk a little bit of price and volume on these indices, man, because we are going to have quite the weekly volume bar across the board right now. Folks, we're going to blow apart anything we've done since April 7th. April 7th might be like a week like we've never seen before. This whole area, okay, was like we've never seen before in terms of Liberation Day, the February volatility that led up to Liberation Day, and then the April 7th 90-day reprieve. The market is talking, and pay attention, folks. Okay, it doesn't mean we're going to hell right now at all, but we are priced for near perfection, and you are seeing, okay, some of these tech companies, even when you got Microsoft out there charging higher. Nope, look at Microsoft, man. You're off by 1.7. Microsoft just traded $30 off of where it was yesterday morning. They could not have delivered better. Well, they're trading low with everybody. Meta as well. The market with Microsoft and Meta yesterday not being able to hold things up. You got Amazon down almost $20 this morning to $214. Apple digesting their earnings, off 2% right now to $203. You jump over to NVIDIA shares, holding up relatively well, all things considered. Even in NVIDIA, though, you got some selling. Kicked things off yesterday. Look at that volume spike in NVIDIA, folks. Okay, this market just trails higher on lighter volume. And we got two big days that is going to put a big weekly volume number on these. NVIDIA, not so much. NVIDIA looks one of the strongest out there. Not surprising. Yeah, Microsoft looks like it's going to 600 still, man. Look at that. Microsoft doesn't even put up a red bar on this week, right? Look at that red bar we got in the S&Ps. And Microsoft doesn't. Meta's not going to do it either on a weekly basis. That is a big bar as well. Amazon, different story on a weekly basis. Amazon might have some problems in the near term, folks. They underperformed their competitors, and Jazzy really didn't have a reason. All he said was we're in the early stages. That means nothing. I mean, not to, I'm not an Elon hater, but that's kind of like the Elon talk that I always perk my ears up. And he says, like, that doesn't matter because we're in it for the long game or something. Well, investors, they don't go super long. Sometimes they do with Tesla. But investors were not in the mood to hear why Amazon barely met expectations when everybody else blew it away. And yeah, they are the clear leader, but they're not going to be the clear leader for long if Microsoft's growing at 39% and they're growing at 17%. Because Microsoft will eat their lunch in 2 years at that type of a compounded growth rate. 2 years. All right, we check in on some other equities. Yeah, UNH is not stopping, folks. Look at this. All right, you have the earnings this week. We're breaking lower again. All right, you are breaking away from $300, folks, on UNH. You're down by 5.3% today. If you're looking for safety, why would you ever hide here? And here's how I look at equities like this, folks, okay? I've been talking about this a lot. If you were watching the program, you may have seen me talk about the articles that came out from the Journal in 2024. And yes, okay, this equity, they're going to be around, okay? They're not going to get put into bankruptcy through this. They will be around. And at some point, investors are going to be able to catch that falling knife. I just think there's better areas to look in the market right now, folks, than this equity. It's extreme volatility. I get it, okay? But you're talking about a business that is basically built on Medicare fraud, for lack of a better generalization, okay? And yeah, that should not be happening when the taxpayers are paying for it all. And we're talking about $50 billion over a few years. The brain just can't even comprehend what they've been getting away with. And now it's time to pay, and they are paying. S&P's off by 110. We're coming back, folks. 33 minutes left to go in trading. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. And yeah, it's going to be an interesting 30 minutes to close out the trading session. You got the S&P's down 110 right now. NASDAQ 100 off by 2.1% right now. And yeah, throw a little fire on top of things. Why not? President Trump. Oh, that's not the one. Wait, forgive me. Maybe it is. Yes, there it is. Trump orders firing the top labor official. Folks, this is where the politics get crazy, okay? I hope reasonable minds, can anybody, and I know we have a bunch of Trump fans, okay, and I'm hopeful for a lot of what Trump's doing, okay? But can anybody defend why this person is getting attacked online? The personal attacks, folks, are bogus, and I'm being so kind with those words, okay? Talking about that this person deserves to get fired, that they're incompetent and unqualified, okay? You should demand better of the president, period. Because all it does is throw shade on the details that matter and the reality. And the jobs numbers weren't manipulated. Okay, this is how it goes. It's always how it's gone. Understand how the data works if you want to understand it. Don't throw crap at the wall just because you want to. It's like this poor person, that whoever... Erica McIntarfer, not familiar. She's probably having a hellish day. And it's probably not her fault, folks. And that's the president hanging her out to dry for all of his supporters to attack out there. And, hopefully that doesn't happen, because unless I see something different, why is it her fault that that's the way it works? I just don't understand how any of that makes sense. And he gets to do that and attack people for no reason for a political gain. And all it does is cloud the actual data, what's going on. That's the data. That's how the data is collected. Understand how it is. You had Waller pointing to it. Okay, nobody caught that. Right? Why wasn't that given more credence? I didn't hear that. Okay, Waller knew it. He talked about the revisions. Okay? He didn't talk about manipulation. He talked about revisions. And this is where, for the people who are huge supporters of President Trump, man, hold them accountable, because this is where it goes, nonsense. And if you want better things, you should support better things. I just don't understand how that's, this person needs to get fired immediately because there's a revision. That's not okay, folks. Okay? And the people who champion it allow it to happen. I mean, it's just unfortunate, man. That's a real person out there. Okay? That's getting attacked, and the president is the one doing it. And then it comes to livelihood beyond that. Talking about getting fired. Anyway, nobody stands a chance when you're in the path of whatever's going on right now. I'd love to see somebody walk President Trump through the reason why and then say, I don't care, fire her anyway. Right? I don't care, fire her anyway. Who cares? Who cares about her? The humanity of it, folks. Okay? That's a real person there doing their job. All right. And yeah, they're fired up in the Tigers Den about UNH, folks. And hey, maybe it will be an Enron like. Those articles, man, the reason why I talked about it so many times is, and here's what's wild, okay? The articles I posted in the Tigers Den, folks, okay? And listen, if you didn't get a chance to read these articles I'm talking about, folks, send me an email at Tommy@TFNN. I will get you these articles that the Journal wrote on UNH. They wrote them in July and August of last year when the stock was accelerating to highs. People knew it. The data that they had in those articles, okay, was astounding that nothing was happening. Well, justice takes a while sometimes, especially when you're dealing with companies that are valued at hundreds of billions of dollars, which is what UNH is. Now, I don't think it's going to be an Enron deal, okay? Enron is quite a case to compare it to. It's like, I don't think it's going to be. But you might have a company that emerges with a much lower market cap than it currently has. And, I'm drinking some carbonated beverages right now, and that just got me. Apologize. What I don't like about trades like this, okay, folks, is, and listen, the risk equals reward, okay? Everybody wants free yield without taking the risk. That's not how it works. You are always rewarded in accordance with the risk that you are taking, right? So that's why people love these risky trades. I get it. Believe me, I get it. This is coming from somebody that plays poker, or played poker when I had a little bit more time, and I still love the game. I play occasionally, all right? I haven't played in a while. They just had a great $2,500 tournament in Tampa. Got about 330 players, something like that, playing $2,500 a month to enter. And the winner walked with 165 grand. Didn't have the time to put in that. Time is the one thing on there. But I'm all about it, man. I'll put up $10,000 to play in the World Series of Poker. I know 9 out of 10 times I'm going to lose that 10 grand almost, right? But guess what? Maybe I'll win that tournament and I'll win $10 million. Okay? That's the way that you think about it. And then you run the expected value. You run that scenario with the sample size of infinity and tell me what my expected value is. And if I have the bankroll to withstand the variance, remember that part, folks. Do you have the bankroll to withstand the variance? Then yeah, I'll take the risk if I think it's an expected positive value. Okay? Now, here's where that gets a little awry. Imagine this. Somebody tells you that they have a trade for you, and they tell you that per the statistics and probabilities, with the variables that they have, they can guarantee you that on the long run, your expected value is a 20% profit for any bet you make, right? Let's say on the long run, you bet $1, you're going to make $1.10 in the long run. You say, how are you confident to bet that forever, right? You say, well, I think I can bet that forever, but tell me what kind of variance I'm going to be dealing with, okay? This is a great example. Stay with me. And you know what that proposition is, folks? That proposition is playing Powerball, okay? And at some point, the lottery probably grows high enough that you almost have an expected value that is positive because of the dead money in the prize pool already. Now, where this goes a little weird in the lottery here is that, well, you get the situation that if multiple people win, right, then you split it. But let's just say I told you that, no, I'm giving you odds that you're going to win the lottery every 1 out of 200 million times, okay? And when you win it, you're going to win $500 million, and you're going to have enough money. Let's say you're going to win $1 billion, all right? You're going to have enough money to pay for taxes, pay for all that. So your expected value actually goes to every dollar you bet. You're going to make $1.20. Folks, you got to make that bet so many times to reach your expected value that you got to be careful, right? But nonetheless, on UNH, man, I don't want to make that bet. Because why? Because I can't put the variables in, folks, okay? That whole conversation went a little bit longer than I thought. I don't know what the variables are. I have no idea what this company is doing, man, okay? Now, you can trade off the technicals, which is why I love technicals. Technicals is saying this thing's going south, man. Look at this chart on a weekly basis, right? Yeah. And then you add on top of it that, hey, you don't know really what's going on, okay? I like looking at companies that are real, with real books, and then they trade off the technicals. Beyond that, there's some meme volatility almost. Stay tuned, folks. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, and let's talk about some of those revisions again, because they are going to get all the attention, rightfully so, in this poor head of the BLS, okay? And this is where, folks, politics, Republicans, listen, Democrats drive me freaking crazy half the time, all right? At least half of the time, if not more so, man, okay? But this stuff is nonsense that these are getting attacked. Look at this collection rate, okay? The black here is the initial collection rate to the payroll survey. And this person's going to get fired because it's basically going haywire during COVID. It started out at 80% prior to that, and now you're dipping down between, what are these numbers, man? 49.4%. Sometimes as low as, what was the lowest report here? 47%. Okay? Now, you can make the case that maybe they shouldn't put this data out until the next one. That would be a much better case, right? Look at the second collection rate, okay? It's amazing what experience does, folks. Imagine, nobody knew this. Did you know this before today? I didn't know this before today, okay? Yeah, I didn't know this. But you better. And why are we waiting for two collection rates? Or why isn't everybody telling us? And this is what Waller was talking about, okay? Revisions. He knew it because he knows the details. Yeah, so check out that collection rate, folks, okay? So, they didn't do anything wrong. That person doesn't deserve to get fired. And the data is definitely pointing to a slowing economy. They can all be true, folks, okay? Yeah. And that's the most revised down since 2009. It's a big number, man. When you're talking about the yearly, the monthly, everywhere. And this was labor market worries, okay? That's what they were talking about. And guess what? We're there. Just that quick, man. But yeah, the other thing is that we are way past the era of bad news, good news, good news, bad news. We are in a big era of bad news is bad news, folks. Okay, this market is teed up on multiples right now, and the Fed cutting is not going to help in the multiples if we can't add jobs over 3 months, right? We're really close to actually dropping jobs right now. The 3-month average is 33,000. You know there's going to be revisions now, right? What's going to be the revision next month to this month? If you're only getting return rates of 40, 50, 60% on those surveys, you better believe there's going to be volatility, man. Oof. You better believe it. Man, wild stuff. We live in interesting times, folks. Well, listen, my dad, time of the trade, okay? I know I jump around to fundamental stories, folks. I know I do. But, man, I have price and volume ingrained in my blood, okay? And you better believe we got some quality volume to the downside right now. And our man Tim Ord, okay, talks about the SPY VIX. What do you think the SPY VIX is doing today? As the VIX is up 25%. Folks, that's the denominator of your fraction, right? The numerator is the top part, which is the SPY. And the VIX is the bottom part. And yeah, you got the bottom part of your fraction going from 15 to 21. Okay? And what he does is he does the SPY. And the SPY only comes down from 640 to 620. So for instance, okay, that SPY VIX ratio that he's talking about, so we were at about 640 divided by 15. Oh, excuse me 1 second. 640 divided by 15. That would have put you at a SPY VIX ratio of about 42.6, okay? And then you go 620 divided by 21 is down to 29. So that SPY VIX ratio tanks when you get a VIX spike like that, and it could be indicative of either for even further selling, folks, when you get that type of a rip-roaring, because it's saying, hey, you got dramatic fear spiking in this market right now, okay? And yes, folks, we've taken back July. Okay, we really have. Okay, we're at June, end of June prices. But the other way to say that is, we're right where we were on July 16th. This is not what a pullback or fear looks like in this market. We're right where we were July 16th. Can I say that again? Okay. We are trading where we were July 16th. You're only giving up gains that we had of what? The final 7 days that we've traded higher. That's it. That's all we've given back so far. And meanwhile, you've had a run. We've been looking for a B point, okay? And our man Basil Chapman, I'm going to get with him this weekend. He's got it ready, folks. He wants to do a webinar, and he's going to do a webinar, man, because guess what? He's ready, and he's primed, and it's a perfect time for it. We'll talk about that next week as well. But, yeah, pay attention to the volume, folks, okay? This is the biggest day we've had since we started catching a bid, and it usually doesn't come in a 2-day run. And you jump to the NASDAQ, we're talking about the same thing, man. Right? Look at those 2 days. Look at the volume. Okay? You're rising higher on declining volume the whole time. And boom, we blow it out of the water. You take a look at the weekly. And yeah, we don't have the volume yet on the NASDAQ, but just check this out. So on the NASDAQ, right? Last week you did 2.6 million shares, contracts. Just today and yesterday you're at 1.5. That's going to be 2.5. You're going to be at about 3 million contracts, plus the close. Yeah. Again, going to be the most weekly volume on the NASDAQ contracts as well since April 7th. Oof. And yield's not stopping, man. Boy, we haven't had a move like this in a while. Up a full 0.7 ticks right now, 112.09. And what are we flirting with now, man? $4.21, just like that. Oof. And yeah, so you have a Fed governor resigning, which is going to give Trump a nominee. Oh, geez, what did I just do? I just hit demand. Okay, that's all right. Adriana Kugler announced Friday she's stepping down from her role at the central bank. In a letter addressed to Trump, she did not state a reason, only noting that she'll be returning to Georgetown University as a professor in the fall. So that was going to expire in January. She's been on there since September of 2023. And she's filling the unexpired term of Leo Brainerd. And as governor, she was a permanent voter on the rate-setting FOMC. And so Trump will be able to put a nominee in there. 2 of his prior appointments voted against Wednesday's meeting. And she was the one absent, interesting enough. And they said it did not have to do with the vote. Hopefully all's well with her, as she was absent for the vote and she steps down. But hey, you're going to get a Trump nominee in there. And we'll see where it goes. But the pressure is on. All right, folks, we got the S&Ps in negative territory. We got one more segment, folks. We're coming back. Stay tuned. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yes, it's not stopping, man. We have the S&Ps right now off 110, and when you look at yields, we're at almost 4.2%, just like that. And man, you jump over, you're talking about the front page, what's hitting everything. And yeah, whether you have the revisions for the jobs, okay, this is following Amazon. I mean, the headlines are just everywhere right now in terms of weakness in this market. Amazon off by 8%. 8%. Apple puts up great numbers, off by 2.3%, right? Both, Apple's numbers were very strong, folks. And yeah, the market's down negative, but they were just dramatically strong numbers. And you're off 2.3% right now. Amazon, some weakness in AWS, without a doubt. Yields, you talk about a drop. We jump over to the 2-year. Okay, we've been looking at the 10-year. The 2-year, finally a slight one. But what do you have on there? Yeah, we have a Fed governor stepping down, and that Fed governor, that stepped down, she had been hawkish. So, hopefully everything's okay with her and her family, because it seems like she wasn't even present for the vote. Then she's stepping down. Nonetheless, either way, she's out. Trump put somebody new in, and, he orders the firing of the statistics chief. I mean, hopefully this one gets, for the people that support the president, folks, hopefully, he gets some pushback here. Because this is where the people who don't like the president lose their mind. When you have people in government getting fired because he doesn't like the data and he just claims that it's manipulated. I don't even know, right? Is it manipulated? Either way, she's incompetent and unqualified, that would say, because it's going to be replaced with someone much more competent and qualified. It's garbage, folks. It's a real person with a real family, with a real life. And, anyway. Hey, this market, though, the pressure is on no matter what. We're going to have a new Fed governor, man. And no matter what, the data is lining up, man. There is weakness. We are only adding 30,000 jobs a month right now for a 3-month average. You better believe the pressure is going to be on. And we got yields dropping. Watch out for that housing market, right? All right, I'm coming back. Yeah, that's it. Lennar. I'm coming back for the 4 o'clock update, folks. But have a great weekend. Have a safe weekend. And we'll see you back here Monday morning for the morning market kickoff at 9 o'clock. Have a great one, everybody. Thanks so much.
Building